the best investors are the most informed investors. And that's why you're going to love this video. I'm going to break down for you exactly what asset types get the best returns, is most protected, and can mitigate your risk as much as possible for asymmetrical returns like never before. And there's so much fluff out there that I'm going to uncover the veil for you and show you how my team done $1.6 billion in transactions over the past few years in the real estate sector. But I'm going to cover not just real estate, but the main 4 assets out there and show you exactly what to expect and how to get the most amount of money on your returns. So, without further ado, when we look at assets, we really got to understand our 4 main archetypes. You have stocks, bonds, commodities, and of course the mystery, which I'll cover at the end of this video for more context there. Now, starting off, why is investing so important? Obviously to grow our income, but also it's to hedge against inflation. If you look at inflation, 2 to 3%, it's pretty standard. What we could buy 100 years ago versus now is radically different. Here's a good example. $100 back in 1990 was about $250. You can see why investing is such a crucial part of your endeavor. And of course, being on this YouTube channel and watching this video always tells me you know that process. Now, when we look at assets, I'm going to kind of go super high level first and break down the 4 main kinds we see, typically excluding, private equity, which is going to be a different kind of beast all in itself, with still great returns. We have our stocks, our bonds, real estate, and commodities, which all differ from strategies. And we call it stocks and equities. That's ownership shares in companies. You're betting on the long-term growth of said company. And the sad thing about companies, though, is they fail, revive, and die all the time. Over the great company today may not be a great company 5-10 years from now. So it's high risk, high rewards. And I know people with millions of dollars in the stock market and have made a great income from it. Now we have bonds. This is more of a fixed income strategy. Loans to corporations or government, low risk, low returns. I think there's a place for this. This is more of a defensive asset type for yourself. So you just beat inflation and have a steady return coming to you without any worry or stress. And of course, real estate, which is the more tangible asset. I love it because, they're not building more land, and people always need a place to live, to work out of, and of course, to have a massive hedge against inflation, tax purposes, and so much more. And lastly on this list, we have all commodities, real assets, gold, oil, wheat, things people use every single day in order to have, life. If you look at Bridgewater, they are massively invested in the side of commodities. You have Blackstone, which does commodity, private equity, and of course also real estate. This is going to be a more diversified inflation hedging for you. Supply and demand is a big part of this, big risk on all this kind of strategies. These stocks, commodities, high risk, real estate, pretty medium. Aside from 2008 and COVID, we see really steady returns there. And then bonds, low risk. Our next one, income. Bonds and real estate is going to be our highest kicker for you. Stocks is moderate. And of course, commodities is going to be, not as high. And lastly, liquidity, which is a big part. It's going to change every single day. With blockchain and tokenizations, this is going to be a big differ in the coming years on commodities and real estate. If you look at BlackRock right now, they are rolling out a massive agenda to make tokens for these kind of assets and make them more liquid, which will balance the scales out even more and really change the whole entire field as we know it. Now, let's go into more detail though. When we first look at our big one, stocks, every generation will see investing differently. If you're in the 80s and 70s, the stock market made sense. The American economy was booming. People made tons and tons of money. They invested in stocks. And as time progressed, things have changed. But overall, I will say, if you look at stocks side by side, a 15 to 16% just about return in the S&P 500 annualized. We have the NASDAQ up to 17, 18%. The Dow 10 to 13. Overall, 10-year return 323%, including dividends. Excluding dividends, around 256. This has a 12% annual inflation adjusted returns. Massively, massively beneficial. Now, there are some drawbacks to, of course, these stocks. As many winners as we saw in the stock market, we also saw tons of losers as well who lost lots of money. So this is why I think it's so important to understand that this is going to be a big bet. And there is a place for this. I have a whole video I made yesterday breaking down the ways to kind of divvy up your finances. And one of them is going to be big bets. And this is a big bet more often than not, but it has massive returns. Our next one on our list is going to be our bonds. Bonds is going to be super stable, 1 to 3% annual returns, barely beating the inflation rate. So it's kind of just holding money for you. This one is super safe. You can probably find other CDs and strategies that give you a 2 to 5% return as well. Because at the end of the day, the reason why you're watching this video right now is because you want to just make sure you get the best returns on your money in a safe way for your future, for your family's future, and for your business's future. This is why I'm going to cover all this for us. Negative returns happen, cash competitive happen, but overall, bonds are pretty safe. Next on our list is going to be commodities. Commodities over the past 10 years is pretty much a near zero returns. People love it, but there have been a lot of cycles and changes in the market. And right now, for war going on and oil prices surging, we can see that even commodities can fluctuate. But if we look at energy and metals, which is right now a huge kicker thanks to data centers and AI, and of course other things, we have a 160% gain in 2021 alone, but of course it's super volatile. But it is a nice inflation hedge for you too. And the last one we have is real estate. So this is this traditional residential real estate transactions. Typically you'll see around 10% returns per year on your money. It is a typical driving factor. Maybe as low as 6.5%. Your homes would normally double every 7 to 14 years of ownership. Now, in some cases, I've seen homes, appreciate 30, 40, 50% in a couple months back in 2021, and now it's normalizing. But overall, I like real estate, like here, Austin market, where I'm at currently, is really powerful because you have a great asset that is tangible. It's not going to run away, it's not going to fall apart more or less overnight. And then my favorite kind is going to be commercial real estate, which is typically 9 to 10%, up to 11%, depending on the market you're in. This one has a higher rate of returns than residential houses. You can see here up to 58% if you're in certain different asset types, even as high as 84%. So this is our number 2 contender on our list. We do apples to apples. But here's the thing. When we look at commercial real estate, when we look at stocks, bonds, and commodities, it's not as simple as just what are the returns, because there's hidden factors for all of this. If we take into private equity into account, we look at that, there are tons of tax purposes, tons of gains, massive returns, but also massive risk as well. But for commercial real estate, the biggest reason why people buy them or invest in them isn't just for the cash flow. Honestly, the cash flow returns is normally secondary to everything else. The big driving factor is going to be our tax advantages. It's going to be a way to really grow your wealth over time and outperform almost all other assets out there. Let me show you exactly what I'm talking about. If we look at AI, because I like having data-backed, analysis for ourselves. Side by side, stocks versus bonds were down around 5% in commercial real estate. It means that stocks are winning by a landslide, a third as much. However, there's not a whole lot of leverage involved when it comes to stocks. If you have $1 million to invest, you invest $1 million into stocks, and you can take loans against your stocks like Elon Musk does to really fund his life tax-free. So if you're super advanced, there's a whole ways to do that. Now, caveat though, as an entry point with real estate, you can buy properties for no money down, seller financing, or a larger down payment. So typically the leverage there is massively high. If we account leverage into returns, we have the same 15.6% return unlevered with a 15 to 20% plus on equity. Our returns just jump dramatically. But here is the hidden secret to real estate versus other different assets. The taxes. Tax normally, you do a tax purposes for stocks, 20 to 37%. Higher the more you make, the higher it goes. But for real estate, it is 13% levered or even less if we count in a depreciation shield, cost segregation, and capital gain deferrals like 1031 exchanges, refinances, and HELOCs. All these are tax-free, and there are ways to never pay taxes on your money. So inflation on Hedge, this is strong. Rent increases, value increases with inflation. You will always be outperforming inflation for sure. And of course, growing portfolio. You can use the same asset to buy more assets without having to do a whole lot of crazy gymnastics to make that happen. I'm seeing returns for my clients that we're getting them that have a 15 to 22% IRR versus internal rate of return, meaning their money is growing or doubling every 3 to 7 years. Let that really sink in. Like, stock markets are great, but you're not going to see the returns. Now, caveat to all this, I will say I'm obviously biased towards commercial real estate, and you should do the same as well. But you should be diversified. You should have some other eggs in different baskets, like your stocks and your bonds and even commodities. Just we have a diverse, portfolio, so we hedge in everything and play your options correctly. Now, you want more help and more support. You want to hear more about commercial real estate? Down below, do #CRE and have a call with me. No strings attached, and I will walk you through exactly all the best strategies to get the best returns on your money, find the best deals, give you the white glove experience like never before to really help you get the best kind of results in your career as a commercial real estate investor or investor in general. Thanks for watching. Have the best day yet. Make sure you share this video, and I'll see you at the top.